All right, I'm back on. Hopefully everybody logs back on. Can you guys hear me? Type if you can hear me now. Type 1 if you hear me. 2 if not. You hear me? Okay, good. All right. Excellent. So let's start now again with the slides. Everybody can hear me now. My apologies. All right, just give me 1 second here as I load the presentation. And we'll give everybody a second to get back in here. While they are, I'll put up the charts. Now, if you were looking at my indicator today, you can actually see the indicator gave you a pretty good move as far as the movement. Aussie Swiss was the biggest mover today. So take a look at Aussie Swiss. Hold on, we still got more people coming in. I'm putting in this presentation, so just give me 1 second here. Entries and exits. I put together some slides for you guys, so I hope you guys appreciate it. All right, there we go. It's ready to go now. Start. Okay. All right, so back to it. And again, everybody can hear me, so we're good to go. All right, so obviously we have two types of entries. We have a market entry and we have a limit entry, okay? You can add a set price by adding a stop market or a stop limit, all right, when you're taking your trades. When you're adding a stop to the order, it limits the order in terms of your slippage. That means you're telling the broker that you want to get in based on a certain price within the limit order, but with a stop order, you're basically going to get filled irregardless. So let's take a look at the slide here. So with a market order, this is really used for entering and exiting a position immediately. All right, so keep that in mind. The positives are immediate execution. Now the negatives, there could be some slippage. Okay, you may not get the inside bid and ask, so keep that in mind. That you are guaranteed to get in and out, but again, there could be some slippage. All right. Now, a limit order. This is for specifically planned entries and exits. It's best used for targets, okay? Now, there is no slippage. You might even get a price improvement. This is the benefits of a limit order. The only downside, or the biggest downside, I should say, is that you may only get a partial fill, or you may not even get filled at all. So this is why you don't want to use a limit order for your stop loss, okay? A stop market order is the best thing to use for your stop loss at all times, okay? So it's a stop loss to exit a trade or a confirmation for breakout entries, okay? It's very important we understand that. It's very good for risk management because you will get out. You are guaranteed to get out with a stop market order. There's possible slippage, but you are guaranteed to get out, okay? Same thing as far as trying to get in. It sucks to try to get in a trade and you fail to get filled on the order. So it's nice to know that I'm guaranteed to get in, or even in any case, guaranteed to get out. Now, as far as the stop limit order is a confirmation or breakout entry. This means you're telling the platform to get you in the market at the price you've designated or better, no worse, okay? Now, the downside is you may not get filled. Okay, you may get a better price fill, but you may not get filled at all. Don't use the stop limit order for a protective stop, okay? Because there's no guarantee that you're going to get a fill. Let's move on. So you have two types of orders. We've got instant execution, and then there's also pending orders, okay? So an order that a Forex broker executes immediately at the current price, okay, that you've requested, this is an instant execution. The pending order, it's an instruction to open a position in the future market when the market reaches this requested level, okay? So instant execution is a market making order. Pending execution is a market taking order. Instant execution brings liquidity to the market because you're taking a fill wherever the broker is willing to fill you. Whereas a pending order, they call it a market taking order that takes liquidity because you're only getting in the market at a predetermined level. Okay, and a lot of times these are typically our targets. So instant execution types, you got the sell order or a buy order. Okay. Now, moving on, what are our pending order types and what do they look like? Give me 1 second here. So the buy stop involves getting in with a order to go long. But keep in mind, the order to go long with a buy stop has to be placed below the current market price. Okay? I must say that again. If I'm trying to place a buy stop order and I instruct the chart or the platform to enter me in with the buy stop order, I must place my order below current price. Okay? I'm sorry. I actually said that. I said that incorrectly. I went in and I said that backwards. I must place it above the current price. Okay. So if price action is at, let's say, $1, and I'm trying to get in at $1 with a buy stop order, that means that price action would have to be at 98 cents. Okay. Now with the buy limit order, you're trying to get in above the current market. Okay. So you can see here to the right, the depiction on the right shows that you are above. The gray candles show that it's coming down and bouncing off of your buy limit. Okay. Now, as far as a sell stop order, in order to get in with a sell stop order, we must place it below the current price. Okay. Keep that in mind, below current price. This means that if I'm trying to enter in at $1, price has to be at $1.02 or $1.01 or higher, so to speak. Okay. Now a sell limit order would be an order placed above the current market price. Okay. This allows you to open a market to sell. So if you see the gray candlesticks going upward, you can see the move. Okay. Now, if you look here on the chart, you have the very first example to the left. The very first example shows a sell stop order. You're placing it below the current market. Wherever current price is, if you're trying to get into short with a sell stop order, it must be below. If I'm doing a market order, I can do a sell market order. I can do that at market. If it's above, if I'm trying to enter above current price and short, it would be a sell limit. Okay. So a sell limit would be number 3. Okay. If you look at number 3 on the slide, you can see price had moved up. It hit the line and then fell down to trigger you. If I go back to 2, you can see that before the green candle triggered you, before price took out that pivot, it had to go above and break the pivot. You see the line there to represent your entry. You're entering above current price when you're trying to get in with a buy stop order. Okay. Now, if I'm trying to get in with a buy limit order, I'm getting in below. Okay. I got to get in below the current market. I've got to set my entry below wherever the current market is. Okay. Lisa, you will be able to access this video on YouTube, on my YouTube channel. If you guys just subscribe to my YouTube channel, you can get access to it. I also typically post some of the videos into the Young Chili Fam chat, so you guys get access there. All right. So it's very important that you guys understand your entries and your exits and where to put the cursor. I see a lot inside the Young Chili Fam chat, where in other various IML chats, where you guys are going in and you're saying your order is not being accepted by the broker, mainly because you guys are going in and you're placing these orders in. I'll drop the link later, Ferris. I don't really want to take the time to go outside, what I'm doing, because I have to actually go to the link. But for those of you that are wondering why the orders aren't taking, it's mainly because of the position of the cursor. on the chart. The position of the cursor is very, very important. Okay, let's move on. I'm going to show you a slide that kind of helps you. All right. So notice we have an entry type based on a designated area. This designated area, we'll call it a block bid or a bid block, right? And then up there, we have it in Ask Avenue, okay? So there's two types of entries. The first entry would be waiting for price to go into your zone, into your area, and then placing your entry above the current market, okay? Placing it above the current market. That would be at the green line, whatever that price level is, okay? That would be a stop market entry, okay? Now, if you want to do a stop limit entry, you can place a stop limit entry as well there if you want to. You can also use a stop market entry or a stop limit entry as your number 2 entry. If you want to do a number 1 entry, you would have to place it at that line, the entry curve, before price reaches it, okay? Give me 1 second, you guys. Actually, I'm not going to answer. Hold on. All right, I'm back, guys. So just keep in mind that, you know, the entry types that you're taking are going to be either a blind entry or a live entry. A blind entry is a limit order where I'm trying to get in below the current price to go long or above the current price to short. I would like to wait till price goes inside my designated area. I can then add different candlesticks in that area to give me further confluence. Okay, so the number 1 entry would be a stop limit entry. The advantage is it gives you more time to execute and you will get the price you want or a better price. The disadvantage is there's a lower probability of meeting entry as you may not get filled at all. Now the best entry, the very, very best entry is the stop market entry. This could be a buy stop market if you're trying to go long or a sell stop market if you're trying to short. More often than not, if you're playing off a signal or a candlestick pattern, it's a buy stop pattern when you're going long. And you'd have to place that order above the current price. If I'm shorting, it's a sell stop market order. And I have to place it below the current price. Okay? Now, why a confirmation entry only? Because there's less chance of stopping out. Probability of meeting entry is the highest. And the spread will be widened in the direction of your target, not the direction of your stop loss when price is typically moving in your favor once you get filled versus moving against you. You also have the ability to remain in control because you can be present upon entry. This is another reason why I talk about placing alerts instead of just placing the order. If I place the order in lieu of placing an alert, not only am I putting up margin, but I can also get filled maybe after the trade has arrived in a manner that I no longer like the trade, and there's no longer a proper target area or room to get to my target, okay? Now, the disadvantage to a stop market is you may experience some slippage, and there's a little less time to execute. But if you're trading on higher time frames, this less time could be 5 to 10 minutes, okay? Moving on. So here are considerations when planning to exit your trade. You want to make sure that you have a clear planned target and stop loss. This is not only just for exiting, but also entering the trade. You want to look at these things before entering the trade as well as the exit of the trade. So make sure that you got a clear planned target and a stop loss exit. A lot of you guys use random risk amounts, and the random risk amounts that you're using, it really makes it mute as far as using a stop loss because you're not using good risk management. So you want to make sure that your target represents at least a 3-to-1 risk to reward ratio, okay? That means that for every 1 unit or $1 you're risking, you're gaining $3 as far as your reward is concerned. Give me a 1 if you follow me, a 2 if not, because I'll dig a lot deeper if I have to. A 1 if you follow, a 2 if not. Come on, you guys got to be quicker because this thing is live and we're recording. I'll assume that you guys follow me. Taz followed me. Casey follows. Okay, there you go. Thank you. Excellent. All right. Now, so 3 to 1. So that means if my stop size happens to be a 10 pip stop, I need to make sure that my first target is at least 30 pips. Okay. Now, you also want to make sure that you exit before any competitive buying or selling, or just before an opposing zone, before any support or resistance. If I'm long, I want to make sure that I'm getting out as far as my target before opposing resistance. And if I'm short, I want to make sure that I'm getting out from my target before any opposing support. And you can also manage your trade by only moving your stop loss in the protective in a protective order in the direction of profitability. Okay, that means if you're short, you'll be moving it down in the direction of profitability rather than moving it up to increase your risk. If you're long, you'll be moving it up rather than moving it down to increase your risk. All right. So with that being said, I have a question for you guys. And I actually noticed this, and I know the answer. It's like a rhetorical question because a lot of you guys post your P&L inside the Chili Fam chat. But how many of you can consistently say that your winners are relatively always the same and your losers are relatively always the same? Now, your winners don't necessarily have to always have a commonality, but your losers should be the same all the time. That means if I'm able to risk 2% in my account and my account's 2,000, that means I can risk $40. That means every time I see a loss on my P&L and my profit and loss statement, it should only be showing $40. You shouldn't see 60 here, 75 there, $18 loss here, $25 loss here. That means I'm not following my plan. If I'm risking any more than $40, I'm over leveraging. How many of you can honestly say that your losses are consistent? Type of 1, type of 2 if not. And I understand if you don't want to type nothing at all. Okay. I know a lot of you can honestly say that your losses are not consistent. And when I say consistent, they're not the same. How can I have a 3-to-1 risk to reward ratio if I am not risking the same risk unit every time? If 1 is not a constant, how do I know what that 3 times multiple needs to be? Okay? You feel me? Give me a Y if you follow me. A Y this time so I can separate it from some of the ones, if you feel me. How can I know what 1 is in 3-to-1 if 1 is not a constant? How can I know what my 3 times multiple, my reward, has to be if 1 is all over the place? This is the start of a trader. This is your very beginning. Your entries and your exits. They determine your stop size. They determine your stop loss. I know I'm speaking to some of your soul right now. I hope so. Let's go a little deeper. So, considerations when planning to exit the trade, going a little further. Let's say I identified an avenue. The entry is that black line, the lower black line. Okay? My target, the more conservative target, you see there where the line is pointing to. That's my first target. And if it wasn't, I'd better at least be moving my stop to break even because I'm going to probably have a problem there. But what do you notice? Do you notice that it's at least a 3-to-1? It's 3 times the size of that avenue, that street there. Okay? If you understand what I'm saying based on stop size, my stop size needs to be at least 3 times the size of my zone. I'll call it a street. In this case, we say an avenue. Okay? So that means at a 3-to-1, you can see the more conservative target. The initial target is here because it's the opposing area, but the second target, shall I say, would be the one down here. A lot of you miss the conservative target, not realizing that it really has to be. A lot of us don't even move our stop loss to break even once the trade has moved in our favor. We just think we can take the signal and ignore it and just move on back to our everyday lives. Oh, if trading were that easy, trading guys. Forgive them, they know not what they do. So let's dig a little deeper here, okay? Targets are set slightly before an opposing area, an opposing support or resistance, an opposing zone, an opposing street. In this case, the stop size happens to be 25 pips. My math, if I want to get the exact lot size, I'd have to put it in pips. That means if I'm risking $100, it's going to be $100 divided by 0.0025. Okay, this equals 40,000, or 4 minis. If I want 3 targets, I can divide that by 3, and I will be putting 13,000, okay, on each trade, each target. That's 13,000 units, or 1 micro 3 minis. Okay, so in order for me to calculate what I'm risking, okay, I'm going to be risking $100 divided by 25. I'll get 40, okay? Or in this case, $4 if I do it by 25, okay? So what is 4? $4 represents the pip value. If I put it into MetaTrader 4, I'm going to put it in like this, 0.4, okay? 0.4. If I put it in a MetaTrader, all right? A lot of you don't realize it's 40,000 units of the base currency. Bam, 40,000 units of the base currency, okay? Now, the stop size, 25 pips. The trailing stop, give me a 1 if you guys are aware of the trailing stop on the platform. A lot of platforms have a trailing stop. If not, your homework today is to go look up the trailing stop. Give me a 1 if you're familiar with the trailing stop, or even if you've heard of it. You may not know where it is, but you've heard of it, okay? All platforms have a trailing stop. In this case, you can use a fixed trailing stop. You can set the fixed trailing stop at 2 times your stop size. What this will do is it will automatically prompt the platform to move your stop loss to your entry point as soon as the trade moves in your favor. So if you look, you can see it's pointing to that dotted black line. Deja, I know you see it, right? Okay. It's pointing to the dotted black line. The dotted black line is by 2 to 1. And how are you, by the way, Deja? This is one of my faithful followers. Tots is here too. Appreciate you, Tots. Ferris is here. I hope Noe's here. Noelle's the main reason why all of you are here, so you guys have to thank her. All right. The dotted line is our break-even point. That means from my entry to that dotted line, the trade has worked. It moved in my favor. Oh, congratulations, Tots, on that Platinum 150, baby. Congratulations, man. Moving on up. Next chairman up, right? We see it coming, man. So the dotted line is our break-even point, okay? That means that if I'm risking $100, I'm up $200 on the trade. Once I'm up 2 to 1, the trade's moved in my favor, okay? The trade is good. I've got to, at that point, move my stop loss to break even. That means I move my stop loss to where the green line is pointing, okay? I hope you guys follow me there. Now, for my second target needs to be further than the first target. So at least 4 to 1 to 6 to 1. You don't want to go for too much more than 6 to 1 unless it's your only target, okay? Now, notice it's the opposing support. Support is that block down there, you guys. It's shown on the slide. Now, the third target, this is typically that runner. It's what you're going to be using for pivot to pivot, trailing pivot to pivot, okay? Now, here is your calculation. I would request that you guys go ahead and take a picture of this slide. This slide is so important. This is your entries and exits slide. This slide helps you guys identify your risk management. It also gives you your risk calculation. Please give me a 1 if you guys follow me there, okay? Or a Y, 1 or Y. I'm really giving you guys the game here. Again, you could be trading with a 33% batting average and still have a profitable account over the long horizon of your trades if you happen to be trading with the right risk to reward ratio and you're using proper risk management. That means using the right calculations. It's very, 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 very important that we understand this. Okay. All right, now moving on. So notice, after doing my calculation, the biggest, most important thing inside my trade is my stop size. I'm going to type it in. Okay. I'm going to type that in here. The most important part of my trade is my stop size. I'm typing that in there correctly. Hold on. Is my stop size. Bam, there you go. All right. The most important part of my trade is my stop size because it's what derives the rest of my trade. It's where I know that my target is. And this doesn't mean forcing a target. Okay. Right? Forecasting is definitely a major factor there. Okay. So if I'm in a trade, before I place that trade, I've got to know what my stop size is. I can then know what my break-even point is, right? That 2 times the stop area, that break-even point, right? What I have to set my fixed trailing stop to, okay? Now, it also allows me to know what my fixed trailing stop is. I'm sorry, I said it again. My first target is, okay? That means, notice, it says 3 times the stop equals, etc. If my stop happens to be 20 pips, my first target is going to be 60, okay? Because it's 3 times the stop size. My second target happens to be 4 to 6. Third target, I'm putting it very far away, but I'm going to use the chart. But keep in mind, everything I do relative to my targets has to be relative to what the chart is showing me. I've got to have the room on the chart. Now I'm going to go to some of these charts after. I break some of this stuff down, but for the most part, I wanted to make sure that you guys understood, okay? So here is a trade where we're looking to sell dotted green line, okay? Where it shows here, it says proximal line, distal line, or entry curve, or exit curve. Okay? This is your zone. I've got all my parameters inside the zone. Notice it says break-even point. The break-even point is 2 times my stop. That means that if I don't tell the platform to adjust my stop loss to my entry point upon reaching that 47.50, it won't do it for me. I have to do it manually, okay? So first target happens to be just below that 147.160, okay? You can see that the dotted line reflects that, but it's also 3 times my stop size. Okay. My second target is a 6 to 1. There's really nothing in my way. The first target happened to be before the little pivot low that you saw, that candle form. If you look to the left, I don't know if you guys can see my cursor or not, but I'm sure you can see the slide. Okay. And then you see it shows opposing zone. Our third target is not even at the opposing zone because I'm expecting a trail with a pivot to pivot trail. Okay. And that pivot to pivot trail is the technical trailing stop. You can take the technical trailing stop and then use the technical trailing stop to be able to adjust for your risk when you get in a trade and it's moved in your favor automatically. But I also can use the trailing stop to be able to adjust based on an average trading range. I prefer to do it manually based on a pivot to pivot basis because if I'm on a higher time frame, I can move it myself and adjust it accordingly. Okay, but once the bid block is violated, which is the lower low, excuse me, you can see that price forms its actual pivot and establish the lower high where you can see that the healthy downtrend is forming. Now, that was entries and exits. Okay, I'm going to go to the chart before we get to mapping out and going to charting and analysis. I want to go over entries and exits all on the chart so you guys can actually see what it looks like on the chart. Okay, and we'll talk about these entries and exits accordingly. So here you can see we got Euro Aussie, and I had an area that I liked on the 4-hour. I'm going to keep it to the 4-hour. All right, so what would my entry be? Well, my entry with this particular trade would be right here. Okay. And then my stop loss, uh-oh, 1 second there. Let's move it out. All right. There you go. Stop loss would be relatively right here. I'm going to change the color of the stop loss. Okay. So you can see my entry is 70.49. Okay. My stop loss is 70.65. All right. And that's relatively about, you could say 16 pips, give or take. Okay. That is not a big zone, especially for your 4-hour. So if I was to take this trade and add some wiggle room, I may round that up to 20 pips because I typically add 3 to 5 pips. I like to get it to that round number. If it's 16, I'll add 4 pips wiggle room. That means I will make the zone a 20 pip zone. That means my target only has to be what? My target only has to be 60 pips. So in order to make that work, let's say the red area identifies my stop size, okay? And I'm going to add in the 19 right there, boom. That's my stop size with a little bit of wiggle room and space, okay? If I change this a bit, make it a little bit more red, you can probably see a little better. And then let's draw our target area. All right, so if I draw this here, and I'm going to move this over because that's in my way. So if you draw this here and I change the color and make it green, all right, you can actually see that this is my target area, but it's got to be a 3 to 1. Well, let's measure it, see if it's a 3 to 1. It needs to be at least 60 pips. Remember that. Is it 60? Yes, it's more than 60. So the first target should be right there. Okay? So relatively right there. It's about our first target. It doesn't even need to be that far down all the way to the pivot low. All right. So this is my stop size. This is my target area. It's actually a pretty good trade if I were to take it because there's nothing in my way. Now, I'm going to give you a quick little pop quiz. What kind of order, if you were listening to my prior instruction, what kind of order would I have to take in order for me to place in order to sell? Okay. There's only one specific order if you were to place this right now. A sell limit order. No, not a sell stop, Destiny, a sell limit. Okay, let me type this in here. Sell limit order, all right? Because you're entering above the current price. Since we're entering above the current price, if we were to place the trade right now, good job, Deja, it would be a sell limit order, okay? So with that being said, if I was to try to get into to sell below current price, it would be a sell stop, okay? Yes, Tats, you would want price to get up to that level. That's exactly right, okay? So let me get back to my chart here. So if I was to be getting in, let's say I wanted to short with a sell stop, it would be below. I would have to get in at like 69.80, all right? Now, how about if you wanted to get in with a buy? Let's go over here. Let's move to Euro Aussie. That one probably might be in an uptrend. Yeah, just as I suspected. All right. So let's say that you wanted to buy. Let's say you want to go long, okay? Let's say that my stop loss happens to be right here because I wanted to trade right here. And I'm going to give you guys both scenarios, all right? So let's say that I'm trying to go long there, okay? Based on this little speed bump that we call that there, or that little bid block, I'll change it to green, okay? If I'm trying to enter there, what kind of order would that be? Okay? What kind of order would I have to place if I want to go long based on where price is right now? Come on, I'm gonna wait for you. I know some of you are probably typing it in, some of you are probably on the phone. Excellent, Tots. It's a buy limit order because it's below current price. So that means that if I'm trying to get in above current price, let's say at 160, 170, okay? What kind of order? No, Jaleel, no, not at all. Sell stop is so wrong. So yes, Caleb, buy limit. Now, if I'm trying to get in and go long at, let's say 160, 170, what kind of order would I be placing if I'm trying to go long and buy based on where price is right now? Come on, you guys can do it. It's a buy stop order, okay? I would have to place a buy stop order. All right, let's go back to the chart here. No buy limit, buy stop order, right? If I try to place a buy limit order and I want to get in at, let's say 160, 170 above current price, it's got to be a buy stop. Below price would be a buy limit, okay? Keep that in mind, all right? Now, what do I also like about this? I'm gonna tell you what I really, 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 really like. Ooh, I like it a lot, actually. Look at this trend line. You notice that trend line? If price were to come in and hit this area, we'd have to have a couple more candlesticks before it reaches over this area. You could have it possibly line up with that particular trend line right there, all right? So, yeah. So that was our buy stop order. Any questions on that before I move on and go back to some of the slides? Yes, that's exactly right, Fierce. When it breaks resistance, it'll activate. No questions? All right, I'm gonna move on. Let's go back to the slides. Did it really do that? I guess I have to add this slide again. I didn't know it was gonna keep doing that. Oh well. While it's uploading, go back to the charts. Okay. So let's go to the indicator for starters and kind of see what we see. First thing I was looking at was Aussie, okay, Aussie Swiss. Now, it was mainly because the Swiss was moving, but things have changed, okay? Right now, the pound's moved up a bit, okay? So we'll look and see what pound Aussie has to offer us. But first off, what's our bias? All right, let's see what we got as far as a bias. Well, it's bullish today, but on the higher time frames, it's also bullish, but they're really the same in terms of strength and weakness. So it may be consolidating on the weekly. The monthly, maybe the same thing as well. It's not exactly close to each other, but all time frames are bullish, so we'll be looking to be a bull. So let's go to pound Aussie. I'll do analysis on this, and then we'll go back to the slides. All right. So we'll pound Aussie. Let's get both scenarios, all right? So let's say that this happens to be my entry, okay, down here. And this is my short, okay, down here, all right? Current price is right here at 186.33. With current price being at 186.33, if I want to short with a sell limit, I've got to enter above current price. If I want to short with a sell stop, I have to place my entry below current price. If I want to get in and go long, if I'm getting in with a long entry down here, I've got to place a buy limit. If I want to get in above current price, I'd have to place a buy stop. Bismillah ar-Rahman ar-Rahim. Babe, can you give me some water? I could actually drink some water right now because fast is done. It's Ramadan right now, you guys, so I'm not drinking or eating anything during the day. So it's nice, you know. It's give great, you know, honor and thanks and praise to the Creator when I'm able to, you know, parch my throat because Lord knows do I got cotton mouth. So you can see here. Thank you. Alhamdulillah. So you can see here, you got a trend line there, okay? And then you also have a trend line here. This trend line hasn't been there for that long, but it's still there nonetheless, okay? Our price is somewhat kind of wedging in this area here. So let me see if I could actually identify. If you took it there, you could say that, yeah, I'll more so give it like that, okay? So it's forming a wedge. I expect it to bounce out of that area. But until then, this is what you call support. That's what you call, this is what you call resistance up here. This is what you call support. So when I'm below it, it is support, okay? Let me remove this. Now let's go back to the slide because I'm pretty sure it uploaded. Okay, let's go here. What website, Manuel? It's my indicator. It's my specific indicator. I'll give you the website right now. dv.currency.ringgoldrsi.com. There you go. So that's access to the indicator there. All right, let's move on back to the slides where we were. All right, so I'm almost done. I'll have you guys out of here in about 10 minutes. Let's go to charting and mapping. So locating a block. All right, so I'm talking about based on a weekly income time frame trade, based on us taking swing trades, for example. So that means your lower time frame would be your 240-minute chart. Okay, so using the 3-step mapping process to locate the block, it means that it must meet the minimum criteria. It's got to be a strong, explosive move from the street. And you've got to make sure it did not retrace back to the street after the move out. Then you need to make sure that it's got at least the least amount of candlesticks as possible. 5 candlesticks or less. If you've got too many candlesticks at that base, then it doesn't become an institutional bid block. It becomes a support area. And therefore, I won't be looking to enter off of it. I'll probably be looking at it as maybe a target. Okay? Now, moving on. Now, once we've identified the block, okay, you want to make sure that you identify your entry point, the curb line, so to speak, and the exit point, okay, the exit curve. You then start with current price, you look down and go to the left, okay, until you find a very strong explosive move. When you find that explosive move, you're looking to identify that stop size, okay? It's very important that we understand that. When we don't draw the horizontal line on the MT4 platform, this is establishing our entry. Now you may want to either enter there, or you could just simply be placing a limit, an alert there to notify you that when price gets back to that area, okay? Now let's talk about locating an avenue or locating a selling opportunity to short. I call it an avenue. We're going to use our own lingo since we're talking pip talk, okay? That means with a 4-hour chart, I'm going to use the 5-step mapping process to locate the avenue that meets my minimum criteria. That means we start with current price, we move up to look for a very explosive move. In this case, I chose the higher one instead of the lower one that you see, okay? Making sure it didn't retrace back to the move. My apologies, Tim, I'm moving through the slides kind of fast. I see. So I make sure that it hasn't retraced back to the move. Therefore, I'm making sure that it's a fresh area so that it has the most unfilled institutional order flow in that area, okay? Now, with that being said, after that, you want to make sure that price has not spent too much time in that general area for this to be a unfilled institutional order flow area, or an area where there's a lot of banks unfilled orders. I hope this makes sense. Okay. If there's a lot of candles in the upper area, this means that it is an area of resistance. Okay. It's not a avenue or a sell block, so to speak. I'm moving on. Now, once we identify current price, okay, using the boring exciting candle technique, starting with current price, we move up from the right to the left, going all the way to the explosive move. And once we talk about those traffic jam candles, the boring candles, the small doji candles, those indecision candles, right? These are the ones that we typically look for the congestion in that base, okay? We can identify our zone, or our size, our area, so to speak, our stop size, okay? We then draw our entry curve and our exit curve from the origin of the drop, that explosive move, okay? Let me go back, because I know some of you will probably say that I moved a little bit fast, okay? All right, let's move on. I want to get you guys out of here on time. So what's Fibonacci block analysis? Well, Fibonacci block analysis involves you going to your higher time frames. If you're let's say a 15-minute trader or a 5-minute trader, it may involve you going to your daily time frame for you to be able to plot to see where you are on the big picture, okay? So let's move on. So when we go from left to right, we're talking about at the lower bid block, okay? We start from the entry curve, okay? Or even we'll start from the top. We identify the freshest avenue. We start from the entry curve and you go all the way down to the entry curve on your bid block at the bottom. Once we identify the areas in between, we can set a Fibonacci tool to be able to break it up into thirds. When we break it up into thirds, it's going to let us know where we are relative to high on the fib block. Are we in equilibrium, or are we low on the fib block? Now, I'm talking about higher time frame. If I'm trading as a swing trader, this is my weekly time frame. I need to know, am I closer to support or am I closer to resistance? Am I closer to the floor? Am I closer to the ceiling? Okay. So if trading the 4 hour, what time frame do we draw the fib? Well, we would draw it on our higher time frame, such as the weekly. Okay. And I'm saying using fib in a context to be able to measure in between your roof and your floor, not using Fibonacci in a normal context to measure a move. I hope that we all understand that, because all Fibonacci is a measuring tool, okay? Now, block and avenue location. Let's end here. I want to go with the grand finale to give you guys a good idea of how to locate these blocks and avenues, okay? So if I'm looking at the weekly income trade example, the higher time frame is the weekly. So that means after identifying the lower time frame street, okay, you have the higher time frame, right? You got to go to the higher time frame to evaluate its location on the fib block. So if you notice, it says the lower time frame avenue where I'm pointing, it's high on the fib block. This would be a perfect location for me to be looking to go long. Short. Looking to short. If I happen to be looking for a short opportunity, I want it to be in the upper third or inside the avenue, inside that red area. If I'm looking to go long, I want it to be low on my fib block. Okay, that means you can see on the lower time frame on my 4 hour, I would be looking for my buy area, my buy opportunity in the lower portion, in that lower 1/3. Okay, and you can see that it's pointing to it where it says LTF block. Okay, now here's a good example of both, where you see on the left side you have an uptrend. On the downside, you've got a downtrend. If I go with the most current action, you can see that high on the fib block happens to be selling in a conservative area. very high inside the avenue is a very conservative area to sell. Selling in the middle where current price is would be kind of aggressive because it can go either way. Selling low on the fib block down by the floor is reckless. Selling inside an area where there's institutional order flow right at that lower low, at an all-time low or inside the bid block, it's very stupid. Okay, so just keep that in mind. I'm plotting my higher time frames. I'm charting my higher time frames so I can see the where. Then the daily gives me my trend so I know what. Am I a buyer? Am I a seller? What kind of trend? If I already know that I'm looking to sell because I found a sell signal from the Trilly signals or the swipe trades, or just because you were given a signal, at that point, I've got to go look on my higher time frame and plot my fib block. I know this is new terminology, but you'll get used to it sooner or later. I go to my higher time frame to plot my location, my fib block, see where I am on the block. If I'm shorting, I want to be high on the block. From there, I then go to my lower time frame, my daily, and then I'm looking for my trend, and I want it to be in a downtrend. If I happen to be a day trader, my time frames would be daily. I'm looking at fib block for the where and the location, and then maybe my hourly would happen to be my trend time frame, and then I would enter on my 15-minute if I'm day trading, for example. Let's move on. All right, and I'm going to stop there. All right, I think that's perfect timing too. I went over trend analysis several times with you guys. We'll save it for next time, but we'll end with questions. Do you have any questions before I go? I feel we went in deep. Today's session was very informative because not just going over the charts, we also went over slides and tried to kind of give insight as to these entries and exits and then charting. Went over a little bit of support and resistance, but we ran out of time. We'll go over that a little bit next time. But I really hope that you guys took away a lot from this session. Please tune in next time. I'll be here on Thursday, same time, same place. This is Pip Talk, coming to you live from Mr. Wall Street. Peace.